Hey, what's up everyone? This is Sylvester, founder of FX Lifestyle. So in this video, we're going to be going over another cool little trick I like to use with my RSI. As you got a little bit familiar with divergence in the last video and market patterns and support and resistance, supply and demand in the previous one, this one I'm going to try to kind of combine a little bit of all the things we just went over, but I'm adding a new addition to the strategy, to the confirmations that we would be looking for. I do find actually this confirmation to be very powerful, and it's one of the main confirmations I look for most of my entries, as it is very reliable, and you could definitely catch a lot of pips using it. So let's get right into it. So this one's going to be involving the 50 EMA and the 50 RSI level on our relative strength index. So I'm not going to go over how to add this. You should have seen that in the previous video. So we're using the same settings, nothing changes, the same RSI we use for divergence. We would be using for our confirmation with the 50 EMA. So what we're going to do, as you already have known before, we're going to go right up into indicators. We're going to go to the search bar, and we're going to type in exponential, and it's going to pop up as moving average exponential. We're going to click that once. We're going to exit out. We're going to go right up to format. I'm going to change the length of this to 50. And you can make this any color you like. I like to make mine black, and I make it a little bit thicker depending on what screen you're using. I'm on a big Mac, so I got a big screen, and I got to make my lines a little bit thicker, but depending on what kind of screen size you are, you might be okay. But either way, you could adjust that to your own preference. We'll click OK there. So now we got this nice 50 EMA on the screen alongside with our 200 EMA. Next thing that we're going to do is we're going to grab our horizontal line tool. We're going to click that once, and then we're going to scroll down to our RSI, and then we're going to click that just once anywhere right around here, and then we're going to right click the horizontal line. We're going to click settings, go right up to coordinates, and then click on price. So we're going to erase that and replace it with 50, and we're going to click OK. Now, as you've heard in my previous video, the RSI is a momentum indicator. So when you see RSI floating under the 50 line, which would be, you could say, the halfway point between 30 and 70. When you see the RSI floating under 50, you are in a downtrend or more bearish price action. When you have it over 50, you are seeing more bullish price action. So it's a nice indicator for you to know. So what I look for is for the RSI to cross over the 50 level, coinciding with price crossing over the 50 EMA as well. And I use it the same way as support and resistance, like supply and demand, as we went over price breaking a support zone, for instance, and then retesting it as resistance, and then coming back down, or vice versa. I do look RSI to do the same thing, and I coincide price with that at the same time with the 50 EMA. This can be used for either reversal confirmations or continuation trend confirmations. So let's get right into it. Let me just show you some examples here. So what I'm just going to be looking for, just real quick on the charts, I'm going to want to be able to show you exactly what I mean by how I use these as confirmations. So let's take a look here through the chart. Let me just find something nice here. All right, perfect. So let's take a look right here. So we're going to start after this downtrend. So we saw price came all the way down to here. Let's grab our rectangle too. Let's draw out some support and resistance. So we're going to grab this big rectangle here. Go back over to rectangle tool again. Now let's see if actually price, because it found some support here. See where it found the support from. If we go back here on a daily chart, this would have been easier to find. You could see right here, that was perfect actually. Right over here, you could see a little bit of a wick. can actually zoom in here. So as you know, I mean, obviously we're doing this kind of in hindsight right now. So I could just show you this quick example, but you should be drawing these out for yourself in real time into the future. In this case, maybe you wouldn't have most likely drawn it all the way out to here, but if you were coming down here and you're trading this downtrend and you're placing shorts, for instance, let's say, and you're continuing with the trend, in this case here, you're going to go all the way back to the left, or you're going to zoom out to the daily chart and look to your left, because you always want to have these marked out as you're trading, whether price is going up to certain resistance levels or price coming down to certain support zones. You're going to want these drawn out. You don't want to just be trading without having something here from the left to show you where price may actually stall or struggle. So in this case, let's just say I had this drawn out and I looked to the left, it was all the way back there. So you could see price actually did respect that even though it was months later. So we found support here. We actually saw price come up, come down, retested this zone, which looks like it was forming a double bottom. It actually formed another double bottom within this. You could pretty much call this a triple bottom right there. Usually I like to have the necklines be more even, but again, as you know, the markets are not perfect. So we had a triple bottom. I think it's more of a double bottom with a smaller double bottom, especially since I noticed the neckline is actually being retested off of the smaller one. As you can see, price went up, broke through it, actually created another little double bottom here, and then price went up, came a little bit down, came up, tested this resistance zone, came back down, and actually respected the 50 EMA right there. Now, if we're looking on our RSI, we see RSI is doing the same thing. It actually came above the 50 level as it was forming this double bottom, and then when it came down to retest this 50 RSI level, we saw price basically retesting the broken 50 EMA. Now in this case, you would have seen this already be above 50 ahead of time, price being ahead of here, as it was like right on the 50 struggling. So then you would look for price to come, the RSI to come back down here and retest this 50 level. So as you could see, as price is retesting the 50 EMA, the 50 EMA coincides right with our 50 RSI level. And again, guys, this is because, as I've mentioned when we first set up our RSI indicator, I mentioned to you with these settings how closely it follows price. So you're going to see this, and this 50 EMA will work very nicely with this 50 RSI level. And it's just going to grab and give us a lot of extra confirmation. Now in this case here, we could see another example. This one a little bit better than this one here. I mean, we saw price come right down to it. But again, as I've mentioned, it's not perfect. I mean, it's literally like a millimeter away from hitting. But you saw the nice retest there as it's retesting here. And that's a signal in itself right there. So I look for these, especially with the 50 EMA. Now the next one we had was right here, which is actually, as you can see, hopefully by now, is we have a double top. And we have the neckline right at the 50 EMA, which is extra confirmation, just like the 50 fib when we measure out our Fibonacci retracement, and right with the 50 on the RSI level. So you can call this like the triple kill confirmation. And that's going to be price hitting, respecting a 50 EMA plus the 50 RSI plus the 50 fib. And whoever's been following me already for a little while with my analysis, taking my signals, I do like to drop some knowledge in the group and the reasons why I enter trades off of what I see. And the 50 EMA and 50 RSI and 50 fib, you've already heard me mention before. And this is exactly what that is. In this case, it's actually 4, but this doesn't usually happen too often, but it does happen. So now let's just grab our 50, our Fibonacci retracement tool, and we're gonna grab this leg here, bring that up. Look at that. Perfect. It's right on the 50 fib our neckline touching the 50 EMA, touching the 50 RSI, created a little double bottom, almost like a little triple bottom, and price came up. And then at this point, even if we continued our trade or added some buys, this would have been our next resistance zone, as we would have already had drawn out. Let's say from back here, or even here, as we could see, it formed a little peak here and came down. This would have been a resistance level, and as we're going, you could see here, price was respecting, neckline was jumping off of here, right back to here. So this would have been our next little support, future resistance. And then we saw price come down and actually struggle right over here. And it's actually forming divergence at the same time. So you would have seen divergence forming. You would have seen price creating a double top. And boom, so there's your confirmation. So price came up, you see it retesting 50 EMA, you can continue, hold on to your trade, or you could place short buys here if you wanted to, because keep in mind, you don't know that there's a double top forming. You might have been seeing this, but your confirmation would have been a retracement to the 50 fib, to the 50 EMA, double bottom, near a support zone, boom, price went up right there. I mean, we're trading, this is actually the gold versus the US dollar. So in this case here, going from 12 to 20 here, that's actually 200 pips, 200 pip trade off a 4-hour chart. And then right at this point, you would have took your profit right at a resistance zone. If you actually zoom in again, you see a little double top form right here. You see the resistance zone, you see divergence, and this is your signal to get out of your trade and actually even place a short. And then from here, if you place your short, you can see price came down to the neckline, retested it, and then came back down. If you entered somewhere around here, came down to here. I mean, at this point here, you're talking like a 400 pip trade. So these are the confirmations we're going to look for with the RSI. Like, let's just keep moving. I don't want to get off track. I keep mentioning some of the stuff. I'm going to be mentioning some of the stuff from the previous videos, but I don't want to go too much into them. But right here, we could see again, price hit right on the 50 RSI level. And we come up here. As a continuation confirmation, we see price rejected right off the 50 EMA, as well as the 50 RSI. In this case, we saw price come up, make a little double top on the 4-hour. It looks really small. If we were trading on the smaller one or zoomed in, we would have seen on the 1-hour chart. Let's actually go into the 1-hour chart. Let's take a look. So all the way back here, I hate when it does this. I really gotta adjust my settings. I think I'm gonna try to do that before the next video, because I do go between the time frames. I usually always like to look at the higher time frames and then go down from there. Or as I see something on the higher time frame, I'll be zooming into the 1-hour, even sometimes the 30-minute, 15-minute to see closer. That's weird. Why is this not loading? Alright, I'm going to just go back to the 4-hour. My trading view's bugging out. Alright, so back into here. I mean, as you can see, even zooming in, you could see the candlesticks went right up to the 50 EMA, came down, came back up to it again. So you got a double top. And you actually see the RSI did the same thing, did a little double top right there on the 50. It's rejecting it. And as you see, we're in a downtrend, and the RSI was staying under the 50. So in this case, we already knew that we are in a bearish trend, and RSI is still bearish. So we're just going to keep looking for short positions. So we're trading with the trend, and we're also going to be trading with the RSI. Now, even though it is in the bearish, you could do some counter trend trades, which I don't really try to do too much. I don't recommend. But you could see here real quick, divergence is always a good confirmation. It's always nice. It can happen for a counter trend or continuation trends. But right here, you can see we have a higher low, and we have a lower low here. So this would have been like a nice little trade if you wanted to, if you saw price, if you went back to the left, and this was actually a support zone from way back there, you saw price hit it. See a nice little double bottom actually happen on a lower time frame. This would have been like your scalp trade or your day trade, which I'll have a whole separate video on for day trading, but just to point that out real quick, some divergence there. Now, but back to the 50 EMA and the 50 RSI. So I'm going to keep looking for these just so you could see them, so I could go over that with you. In this case, this was a little crazy action here. Could have been news driven or whatnot, but we could see it right here as well. This is where price, what the RSI was a little bit above, and we could see respect from. I'm gonna actually do a rectangle here. Respect from the RSI to the 50 level, which was right with the 50 EMA right here. As you can see, is retesting it and it's acting as a support for price, which is what I like to use the 50 EMA for, as resistance and support. You could see right here as well, as it broke under the 200 EMA, went under the 50 EMA. And keep in mind with this too, when you have price go above the 50 EMA, you want to look for a retest of the 50 EMA. You want to treat them just like you do support and resistance. So you're going to have price come up and then come down to support it. And then you're going to do the same thing with the RSI as well. You're going to have it come up and retest it. And these will be your signals, along with candlestick patterns, possible market patterns forming here as well, as confirmation. So this is just another tool to your toolbox that you can use for confirmations. Now, there may be times where you don't get this confirmation and you get a market pattern, you get divergence, like some of the other ones we've already talked about. And that's okay. You don't necessarily always have to have this. But it definitely makes your entries a lot safer. And it's definitely a good tool to use because it's going to help you trade with the trend. And that's exactly why I have these EMAs up here for. Mainly the 200, so I know exactly which trend I'm in on the larger time frame. And even on the lower time frames. But then the 50 I use to place my trades, especially for day trading or just to help me continue. Because as you can see, price being all the way down here, it's way away from the 200 EMA, and I'm not really sure when at what point this might reverse on me. But as long as I know it's under the 50 EMA and until it really breaks above it and retests it a couple of times is when I feel like, all right, there might be a reversal happening. So it definitely helps in just knowing what market I'm in, and then also that I'm staying in it as well. So in this case here, we have support. You could see price respecting the 50 EMA, it's respecting the 50 RSI. So just to show you some examples, you can see price actually came down here, broke through the 50 and the 200, came up to retest both right here. This would have been a nice signal. We have a bearish engulfing. At the same time, the RSI did exactly the same thing. See that? It's just respecting it. So I'm just going to keep going through the video just to show you more and more examples. And just like any of the stuff I show you guys, definitely keep back testing this so you could see it for yourself. I mean, we even have it here in this point where it hit the 50, respected it, same thing right here. This could have thrown you off a little bit because you see a nice a long wick, so this candle would have been breaking under. But at the same time, though, this would have been giving you a signal that, hey, I'm going to hold on because the RSI is actually not breaking nearly as much through the 50 as price is. So you would have waited for this to close like you always would, and then you see it jump right above there. And then you see it even like, if you zoom in, like a little double bottom, you can see price came down once and then twice and respected it. So even for these smaller trades, you could have it. I mean, off the 4 hour, this isn't what I would be looking for, but it definitely helps just to help add more entries, and you could be catching 50 pips, 30 pips. It all depends on how you're going to want to use these confirmations, but they do work, and always use multiple confirmations. And in this case, this is a multiple confirmation. I always enter with at least 3 confirmations, so that alone right there is 2, and then you just have to add, let's say, divergence, like in this case here. We have actually divergence right off the 200 EMA. So you got 200 EMA, you have double bottom, you have divergence. That's 3 confirmations right there. And as you already saw, price being above the 200 EMA, came here, respected it, came up, and then came here to respect it again. You always want to be buying low and selling high. So in your case, you're seeing it come up off the 50. Off the 50 here, it's respecting, so you know it's going to come down again. Now you're going to watch to see if it's going to break this 200 EMA, respects it again, makes a little double bottom again. I mean, at that time, we already see the divergence. You could have entered right here off this bullish engulfing, It came back down to retest. So right here, you're still like maybe a little bit in profit or just break even, and you're just letting it go. You don't see it breaking, and then price shoots up, boom. Now you could also use the 50 EMA by itself. You could see price respects it a lot of times. The 50 doesn't have to do that. When you want to watch for both to be confirming is when you're looking for entries, and you see both of these. It just gives you extra confirmation. Now you could also just use the 50 EMA as a confirmation regarding whether the trend is going to keep going, or where you can add an entry, or add positions to your entries. So you could just look for that when price comes down to it, and you could see it rejected. So then you have a good idea that price is going to go up. In this case, you had a little bullish flag pattern. You could see price was staying right there. It came up, had a little retracement. See a little bullish flag right here. It came up, looks like a flag. Got the flag pole, got the flag, broke through it, respected this, and went up. So it's definitely a neat tool, and I love to use this. And it's something I personally just came up on my own with. I had these RSI indicators. I don't remember where I got them from. I didn't come up with these. I must have just gotten them from a trader. I don't remember who necessarily, but I've had these, and then I was just playing around, just building my strategy, and I added the 50 EMA with my 200, and I was just like back testing, just looking how price moves, and then I just noticed like, wow, actually these two kind of work together. Like you see right here again, it's retesting it here until I actually broke. It was just breaking at the same time. So yeah, you can see a double top up here. We got divergence again. So I'm gonna show some of these as I go when I see them, just to kind of reiterate things. You see the neckline. I mean, this is kind of a nasty neckline with this really long wick. But there's our neckline right here. Came up for the second top, came down. You could see it kind of like fake people out here, respecting it. It didn't really go much above it and then just came right back down. Here you could see it kind of came up to retest and then came back down again. So you're gonna get that. It's not gonna be perfect, but you'll know what to look for as you trade these, and practice makes perfect. You could see a little divergence happening here. This isn't really like a double top. This is more like a 1, 2. This is one of these patterns. This isn't really like a double top. It's just kind of just hitting resistance there. But you could use that too. You could see if you're near a resistance zone and it's not really a double top, let's say you're not really sure what it might be, but you see divergence, like right here you have a higher high, then you have a lower high, doing the opposite. You could use that as a confirmation as well, as long as you have other ones. You can see price came up here, and actually as the 50 EMA broke, and price was respecting the 200 and the 50, and it just kept going. You can see it bouncing, came up, respecting it. You can see right here we have multiple 50 RSI hits as it's hitting the 50 EMA. And when we're seeing that, and then we look for our next confirmations, and then we're going to look for like our Fibonacci ratios. We're going to look for our support resistance. We're going to look for candlestick patterns. We're going to look for market patterns. So keep in mind, I'm giving you all these tools, and they will be and they can be used in different ways with each other. We're not always going to have all of them lined up perfectly. If that's ever the case, then you got an amazing trade, and you better stack up, and you could really flip your account. And at that point, I'll tell you it's okay to kind of risk a little extra money. But we look for at least 3 confirmations out of all the ones that I'm going to be showing you, and you'll get an idea of which ones you like more. Now, keep in mind, I'm going a little bit off track here, but I'm going to just state this for you guys. You don't have to necessarily follow my strategy exactly the way I do it, or use all of the tools that I use for my strategy as confirmations. What works for me might not work for you, and what I understand and I'm able to use, you might not be able to, or it might be difficult, and it just might make your trading harder if you're going to be trying to follow it to the T or use everything. Like I said, there's multiple confirmations in this strategy, more than 3, more than enough that you're going to need at least to enter trades. and just pick some out. And if that's the worst case scenario, I mean, I would love for you guys to be able to learn all of it, and I would do my best to teach you all of it and for you guys to use all of it. But just at least there might be something you learn, or at least there might be at least one or two of these confirmations, which I'm pretty confident you should at least have two or three of these that you haven't known about before, or at least seen them the way I'm explaining them, and at least use those, and then you can kind of fine tune them into your own strategy, or into something that you're already using, and it just like explodes your trading, explodes like your confidence, and then you just start getting it and you start seeing the market. So don't feel like you have to like follow every single little thing that I do. Um, but this is my strategy. Obviously, this is what you guys paid for, so this is what I'm teaching you guys. Um, and I'm going to be giving you guys constant support. Oh, this is a perfect example right here. Look at that, price came down above the 200 EMA, came to retest it. It's retesting the 50 EMA with it. This is like perfect. And as you can see, we come up here. RSI is doing the same thing. That's extra confirmation right there. Extra confirmation. And now if I grab my Fibonacci retracement tool, I'm going to grab it from here to this high. I mean, look at that. It's perfect. Now you got like a little double top here that actually formed with not much divergence there. So in this case, we would have waited for price to just break through this resistance zone. But aside from that, though, just focusing on that triple confirmation, that triple kill confirmation. We got a 50 fib, we got a 50 RSI, we got 50 EMA along with the 200 EMA, and boom, that's like an entry right there. We saw price go above it, came down, we got the retest, and all three of these, the 50 fib, 50 RSI, 50 EMA. Perfect. That's a perfect trade right there. You enter off the bullish engulfing, let's say somewhere around here, or even let's say up here, so 1128. Price went up to the negative 27 fib extension, and we're at 1151. You got 130 pips right there, easy. So as you guys can see, I love the 4-hour chart, and this is why it's very powerful. But I do look at daily. So we got a nice little double top up here. We have divergence. Now this went way up. This kind of just rallied up there. So this could have been just a nice confirmation off of that. Usually whenever you see price really shoot up like that aggressively, it may tend to want to come back down aggressively as well. So watch for that. Now let's see here. Let's go look at a nicer trend here. Now you're not always going to see these confirmations, guys. These are not always. This is where patience comes into play. I'm going to be talking about patience a lot, and if you've been following me, I always mention it. You got to be patient. You can't always feel like you need to be in the market and always be trading, because these setups are not going to be happening constantly. I mean, unless you're scalping, then you're going to have your setups come a lot more often, but as you know, they're not always reliable. When we're on these longer time frames, these 1 hour, 4 hours, and daily, it takes a while for them to set up. I mean, each bar, let's say on the 4 hour, is 4 hours. Each bar is 4 hours. So it can take days for these setups to show up, but you just make your analysis, you look for your confirmations. If they're not there, they're not there. And then you wait and you just watch price. And you go back to it a couple times a day to see what's happening. Come back to it the next morning and see what's happening. And then if you see a certain pattern forming, then you wait for it to form. And that's where that sniper mindset comes from. And then we wait for our entry. Otherwise, if you're constantly just like looking to be in the market and trying to enter the market, you're just going to psych yourself out, and then you're going to almost fool yourself. Like your eyes are going to fool you and your mind as well into thinking that you're seeing something, or you're getting that confirmation and the price is going to go this way. And really, you're just gambling at that point. You're really just gambling. So don't do that. Don't feel like you need to, just wait for these patterns to form, wait to get these confirmations, and believe me, there's a lot of days in a month. In a month span, you got 5 days each week, so you got 20 trading days. So, I mean, the goal is for you to at least be able to make 200 pips a month, which really isn't that much. You can make that in one trade. As long as, your winning percentage is over 50%, over 60, 70%, I mean, you're golden. I mean, you could even be under 50%. That's the whole trick. And with trading is if you're using proper risk management, and you got higher reward ratios on your trades, like 3 to 1, 4 to 1, 5 to 1, even sometimes, you could actually be at like a 50 or even 45% winning average, but your wins are exceeding your losses by far. So you can actually win more, but as long as you keep them tight and you minimize your losses, you can actually have more losses than wins and still be profitable. That's the crazy part. So you got to keep that in mind. But if you're gonna just take these trades just to take them, then you're not using proper risk management. Most likely, you really don't have a goal. You don't have a target. Your risk reward ratio sucks. You're just gonna lose money in the end, even if you get lucky and have some big wins. But continuing with the strategy. I apologize if I get off track sometimes, but there's a lot of things I want to go over and mention, and it just kind of pops up. But again, back to 50 EMA, 50 RSI, we can see price respecting it up here, respecting it up here. You could see it made a double top off the 50 EMA, made it as well off the 50 RSI. Another double top off the 50 EMA, kind of like a little triple top maybe. You can see a little triple top here, and then boom, and then just price just dropped. I mean, you can't foresee how much price will be dropping or how much it can, but I mean, you could have, let's see, let's take a look. Let's try to find an entry somewhere over here, and then just to kind of give you an idea. All right, so let's say you're watching price here, right? You had this trend line drawn out, this counter trend line, because we're in a bearish market. See, price kind of went up here. You see like a little double top. You see a little bit of divergence. You might have maybe entered off of here, and then price dropped. Now, yeah, let's just see that. I mean, that's an entry right there. I mean, if we're looking left, we're at a resistance zone. See, price made a double top off of there. You see RSI's got divergence. It's sloping down. As price sloped up. So price came down, came right under the 200 EMA. So now you're like, okay, we're going back to the bearish market because it just went above it. It didn't retest and go back up to signify. Even though it was above the 200 EMA, it came right back down. You saw it got under the 50 EMA. Now you're watching for that retest. Now you're going to watch for that retest to see if you're going to close out your positions because it might break above, or you're going to just watch to see like, all right, let me see if I can keep this open. You got your little trend line drawn out. Now you see price getting rejected right off of here, right off the 50 EMA. At this point here, you see it's under the 50 RSI. It didn't come to retest it back up, but you saw it bounced off of there, and you're seeing it. All right, RSI is not doing the opposite and going above. It's obviously coming down. So you got your trend line drawn out. Your next confirmation here would have been the break. Came up, retest, bullish engulfing, price drop. Now it gapped up, but it respected this trend line. That's your next confirmation. All right, I'm going to stay in this trade. So now I'm just riding it out. Now I'm just catching pips, or I'm actually adding orders, because on that big rejection, that's another order you could have had, because you had a rejection of the trend line off the 200 EMA after it was broken twice. Then you had a bearish engulfing candle break through here, through the 50 EMA as well. As you could see, it kind of fooled people out here as well. You see, it actually came up to retest the 50 EMA right here after that big break. You see the RSI right here, respecting the 50 RSI level. You get a bearish engulfing, and then look at that, price just drops, and then you're just going. At this point, you see price going to reverse a little bit, because as you could see, price moves in waves. Like, it's always going to go down, and it's going to have to retrace, and then it's going to go down, and then retrace, and then go down and retrace. You're always going to see it going in like up and down motion. So you're just waiting here, and then you can see it's going to go up. So now you're like, okay, I got my retracement. I'm going to continue with this trade. I'm going to continue riding it. I could see my RSI still under 50, so I'm in a bearish market. My price is still under the 50 EMA and a 200. I'm in a bearish market. So let's see what price does. I'm not really getting any reversal signals here. So price came up. See, kind of gapped a little bit. Boom. I see that rejection. So it's rejecting. Now it came back up just as sharp, but it's still rejecting. and I could see that a little double top formed here. We got a little double top on price. I'm still under the 50 EMA. It's right on the 50 EMA, right on the 50 RSI. Boom, extra confirmation. Not really a bearish engulfing, but I mean, you could have even entered, let's say, off of here, or you could have just added off those confirmation, not even had a candlestick confirmation, but just off those confirmations we just listed just now, and boom, and then price came down, and then you just see the whole thing happen again, and that's just what you're going to be looking for, and this is where you can be adding your entries. I mean, at this point here, if you entered, let's say up here, because you had it like down, you can see there could have been a little bit retest on a smaller time frame. So you entered up here. So we're at like 11, let's say 11.95 to make it easy. Price came down to this point. You're 11.80. That's 150 pips. Let's say you kept this position open. It came up, retested that, and then came down. Let's say it came down like right over here. So you're 11.95 to 11.75. You got 200 pips now. Now price came up. Let's say you kept this open because you saw this. And let's say you rode it all the way down to here because then you saw this big doji, this big wick rejection. You're like, all right, I'm going to close it out, protect my profits. Actually, look right here. If you look to the left, boom, you got a support zone. Acted as resistance next. This would have been your extra confirmation, which I'm not even going over all the confirmations just yet, but you already learned about them. So you had this drawn out. This would have been your support. This then broke through here, as you could see sharply, and then retested it. But you wrote it down to here. Now you're at 11.65. Now you're at 300 pips. Now you come up here, you see rejection. You come back down. You come up, now you see a rejection because now you saw support being broken. Now you're at resistance. Now you see resistance on the RSI. You see resistance off the 50 EMA. You get a bearish engulfing right here. And then from this point, I mean, you just made a crazy amount. I mean, this could have been a 1,000 pip trade right here, almost from 1,200 back down to almost 1,100. It's crazy. Like, you could have made a ridiculous amount off a 4-hour chart. Not including extra positions. So that just goes to show you guys like how powerful this is. And yeah, just watch these videos, go back test for yourself. And I mean, these opportunities are not always going to be there, but you just got to look for them. And these are especially powerful when you have these clear downtrends, when you have clearly the 50 EMA under the 200 EMA. See here, price is just kind of going back and forth. In this case, I wouldn't really be looking for trades. I mean, I might get some here and there because I'm going to see right here a nice rejection after it closed under. I get a nice rejection right here. So I could have took this trade and I still could have caught a good 100, 200 pips. So you can get entries here, but these are especially powerful when you have these more clear downtrends. So that's what we're going to be looking for. Now I just want to show us a couple more examples. Now let's switch currency pairs. I don't really do this in these videos. I've kind of just had a currency pair, and that's where we went from. What do we want to look at? Let's try Euro USD. Let's go back to Euro USD. It's one of my favorite pairs. Love using Euro USD. It's a very liquid pair. It's the most traded pair, most traded forex pair. So there's a lot of liquidity. There's a lot of traders trading it. All right. So in this case, I'm gonna have to grab my horizontal line. Now the horizontal line is like any line that you would actually put on your chart normally. So as you're moving between currency pairs, you're gonna have to add that into your RSI. So back to like rejections, you can see right here, boom, rejecting off to 50, came down, you see rejection. You just see respect. Now you see RSI break above here. This would have been a nice confirmation, especially because we have a double bottom here. We have a neckline. You saw price came down to the neckline. I see, like, it's gonna fool you sometimes. So this is what I mean when I say the markets are not perfect. In your case, you would have drawn out your neckline, And oh my goodness, look at that. Look at how simple that was. You drew that out, and look at that. When price got over here, it came down, it retested that perfectly. Came down here and retested that perfectly. Came down here, went above to retest it, came up to it perfectly. I mean, mine's a little bit crooked. Perfect. Just a little bit up. Just like that. Look at that. It perfectly came up to retest it. Came up, came down. So just even like breaks and retests, these could be your trades. And there's traders that do trade that way. They just look at break and retests of support and resistance zones. But yeah, we got a double bottom. We got a neckline. See, price broke above it, kind of faked us out. But see, when we got that break and we looked for that retest, we didn't get that retest and a rejection off of there. So this is why you wouldn't have just entered short, or it would have kind of let this bother you, especially since also it didn't really fully break our 50 EMA with a retest either. Like, this was a minor breakout, and we just saw price went right above it. In this case, you would have just looked at as a respect of the 50 EMA, somewhat the 50, somewhat the bottom, double bottom neckline, because it broke right above it. So RSI, neckline, 50 EMA, double bottom, boom, price shoots up right off the respect right there. Especially since you also saw the RSI was a little bit like, for lack of a little better explanation, just kind of ahead. In real time, you would have saw that price was breaking under the 50 EMA, but the RSI was actually still above it. In that case, that can indicate for you that there's a little bit more bullish momentum than there's bearish. Because keep in mind, the RSI is a momentum indicator, and in this case, when it's above 50, we see more bullish momentum than bearish. So it didn't quite break underneath there yet. So at that point, you could be watching like, okay, let's see if this actually breaks through that 50 EMA. Let's see if there's actually enough bears in this market to break through there. And then you would have just saw that bullish engulfing. You entered, let's say, right here, right around here. So we're at 111.3. And we go up, let's say, to the 200 EMA, our last resort. Resistance. Y'all can see that I'm making too many videos right now, and they're a little long, but I'm actually liking that, because I definitely want you guys to have a lot of material. I don't want to make like 30-minute each videos. Actually, I remember, getting off topic real quick, one of my early trading days, I won't mention any names, I followed this one trader, and I did sign up for his course, which it's crazy. I'm charging you guys $195 for these courses, and it's funny because I actually paid like $495 for his. And I've learned a couple of things, but it really didn't learn much. But again, to the point, the reason I really kind of didn't was his videos were like 15-minute each. Sometimes some of them were like 30 minutes. The longest one was probably like maybe this one, or like one of my previous ones are like 45 minutes long, where he literally just kind of put everything together. And I'm doing that with each individual, or two individual confirmations in each video. So because I just want to definitely let you guys have as much of me as possible. Because I know for some people, the 195, that might be your savings, or that might be, a couple weeks of working and saving money, or a month of working saving money. So I definitely want to just make sure you guys get the most bang for your buck. But yeah, back on track. You could see just price nicely respects the 50 EMA, and it does that at the same time with the 50 RSI. So in this case, you would have closed at this resistance zone, and you entered right off the bullish engulfing because of all these confirmations down here. You're at 1.11333. Took profit, let's say, like right here, even though it went higher. 1.13641. What do we say it was? 3. That's 200, like 250. Yeah, actually, exactly like 200 pips. You got 200 pips right on that trade right there. That's crazy. That's your minimum for the month. Again, this is a marathon, not a sprint. If you're not trying to get rich quick, which this is not, and it's not going to be, and you're going to most likely just blow your account anyway. If you're just setting a goal, like I mentioned, for 200 pips minimum, this is it. Like, you could have just made this trade, and this happened. Now, keep in mind, we're on the daily right now. So this was actually that one trade you needed that 1 month. Like right here we got beginning of August, and then right here we got the end of August. Actually right in between there is when you took this trade. So you took this like probably like right there, August 15th, towards the end, like mid August. That one trade right there, within like 2 week span, 1 week span, because this did shoot up, you got 200 pips right there. You just smashed your goal off of one trade. That's crazy. So let's just take a look at a couple more. Like right here, this one's perfect. I mean, literally just touch the 50 RSI, touch the 50 EMA. It's perfect. I mean, you know, you're in a bearish market. We're under the 50 EMA. We're under the 200 EMA. You could see prices making lower lows, lower highs. RSI is still under the 50. And you see it come up right to the 50 EMA. You see that rejection, bearish engulfing right at this point here. You already saw RSI was rejected off that. Boom. And you enter on that just alone on that. You just see it touch. Like, I mean, you could be seeing here these retracements. They're not always going to touch the 50 EMA. So then at this point here, you don't really see these as confirmations because you don't know what price might do here. It might actually just form like a reversal pattern. So, I mean, you look for that touch with either the wick or the bodies. And then you can look for a market pattern here. Or in this case, when you saw this large bearish engulfing and you already saw that rejection there, I mean, that's perfect. And then you could also see we already had resistance right here, which was previous support. On the 4-hour chart, you saw price come down, go up, come down, test, broke through, retesting resistance now, came down, retesting resistance again, and you come down. I mean, you could kind of look like this is almost a little double top, but not really. I prefer to have two peaks, not like separate ones like that. They're just kind of too close here. So, but either way, you're still resistance. So you see that extra resistance point right here, and sometimes that one retest isn't enough. You'll see price come down and then come up and then just test that again. And then at this point, this would have been that extra confirmation that like, all right, this support zone that's now resistance is actually holding up, and it's doing it right alongside the 50 EMA. So that's your extra confluence with the 50 RSI. All right, we're still in the bearish market. Boom. I mean, that trade right here is crazy. You can see it broke through, little wicks right up to the top here to where this was a support, came down. But let's say you entered like right here. You're at 1.227, let's say 1.228. Oh, that's crazy. That's like 600 pips. 600 pips right here. You could have closed out because you saw it stall out. You kind of started seeing RSI shooting up, so you're expecting some bullish momentum here. And say you closed out like right here or even over here. You got 500 pip trade, 700 pip trade. That's crazy. That's crazy. And that's all you need. Honestly, that's all you need. And you could just do that consistently. You'll see over the months how much more you're racking up. And then once you get more comfortable, you could get a little bit more risky, up your lot sizes, and then you're really going to be raking it in. So I don't want to make these videos too long, like I always mention. I think it's long enough. So thank you guys for watching. I hope you guys learned a lot. Remember, we got 24/7 support. We're going to have webinars. So if you have any questions as you watch this that maybe I didn't explain right or you couldn't understand it right because of the way I explained it, any questions that might have arose, anything like that, definitely write them down. You can email them to me. You could ask me for them on the webinars when you attend them, and they're all going to be recorded anyway, so maybe somebody else has asked it. And just so definitely watch the webinars after this. And I'm going to be constantly updating these courses as I get feedback, as I realize maybe what I haven't went over clearly or in detail that people are noticing. I'll be making extra videos. So I hope you guys like it. Hope you've learned a lot so far, and there's more to come. So I'll see you guys in the next video. Peace.